Hello, investors. It is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Tuesday, August 6th, 4:32 p.m. Eastern Time, coming to you from Fort Lauderdale, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we continue to have that red under a correction. And if we look at the GROTECTION gauge, market leaders still in a bearish downtrend. A few stocks are holding up here and there, but primarily the best looking charts are staples, defensive, utilities, and these are stocks we primarily don't traffic in. Short term, we continue to be under the 21 EMA, which is a risk off signal for us. Medium term, index is trading below the 50-day, and then long term, we're still above the 200-day moving average. So what happened today? Well, today was a rally attempt day one, pretty weak close, and I'll get into that. But with the VIX continuing to live above 20, the volatility persists. So the final numbers, 21 over 21 list up 2%, 16 green, 1 neutral, 4 red. Big 8 up 1.31% on the day, RG8 1.35%, S&P 1.04, equal weight 0.98, QQQ up 0.97%, equal weight up 0.7, Dow Jones 0.89, mid cap 0.99, Russell 2000 1.01, 60/40 0.18%, and in-house GROTECTION up 0.27%. So let's get into the inter-asset correlation. So I'll start with the chart of the S&P 500, and as you can see, this was a bit of a capitulation here on Monday with the VIX surging, and we tried to rally back up into this 100-day. This is the pink line. This is the 100-day moving average. Rejected and shown a pretty weak close. Pull up an intradays. We gapped up off the open, took opening range highs and trended into the close, but showing some weakness into the close. And then we just about got up to that gap high and wasn't able to get back above. And if you look at the weekly, we are pulling back into this 40 week. We are below the 21 week, which historically in this run has held, pulled back there, it held. And yeah, so that's a big level to break. And if we break 5,000, the top of this base from December could be a level of interest. But overall, we're watching this 200-day down here at 5,000. QQQ continues to be the weakest. Couldn't even rally into the 100-day, and it's sitting right above the 200-day. On Monday, it undercut and reclaimed that level, but that's a big moving average that we'd like to see hold. Dow Jones rejecting the 50-day on a rally attempt. Mid caps found support at the 200-day on Monday and just inside day. Russell 2000, I mean, this is just a big case of from failed moves come fast moves. This was a really nice run here, but and a lot of people were looking at this as like a high tight flag. And on that Fed day, it broke above, closed below, and then you can see from failed moves come fast moves, and this has absolutely been crushed along with the other indexes. But yeah, it's coming back into this 50-day, sitting right around the 100-day as well. So we'll see what it can do. But overall, a lot of these charts with multiple gap downs, it's just going to take days of repair. Not often do you see them just shoot right back up after looking broken like this. VIX, this huge, came off big time today, down 28.16%. And yesterday was a huge day. It was up around 60% at the highs, hit 65.73. And we look today, and there's really only been 3 times that it's done that. And that was in 10/20, 1987, 10/24, 2008, and then 3/17, 2020. So interesting to look back and see. But this continues to be above 20, and we're seeing heightened volatility and makes it harder for position and swing traders. The dollar leaking off inside day. Gold, another failed breakout, really. If you've been watching the videos, we say like this is not a good vehicle to buy on strength. See if you'd have bought it on strength here all the way back. And just as it looked like it was coming back, it's right back into the base, 50 days right below. Gold stocks, again, bouncing today, but another foul breakout. Silver continues to leak off and show relative weakness versus gold, and starting to approach this 200-day moving average. Bitcoin, strong today, up 6%, and kind of starting to put in an undercut and reclaim. It took out these lows, and now it's coming back in, but overall, just a ton of volatility within this area of the market. Total bond pulling back after this big move here. TLT again pulling back after a big run up, and as you can see, the yields collapsed last week and starting to bounce a little bit, and same with the TNX. So let's take a look at the tail of the tape. So yeah, so like I mentioned, the VIX came off quite a bit, but still above 30. Fear and greed ticked back up, but we're still in extreme fear. So with the VIX this elevated, fear and greed at a 24, there is definitely fear in this market. And after the yen carry trade fears yesterday, the Nikkei halted to the upside last night, and so again, another testament of the heightened volatility that we're seeing in the market right now. SMCI, which was a big growth stock earlier this year, they reported after the bell. We'll take a look when I get back to the charts. And still same keys that we're watching. Failure at the 100-day for the S&P. We want to see that level reclaim. 150s continuing to hold for now. And then our line in the sand, 200-day. That is when we remove our S&P exposure if we get a sustained break below 4 days below the 8, 4 days below the 21. Our expectations continue to be a negative. Some sectors today: real estate, tech, utilities, biotech. Some weaker ones today: oil, gold, silver, and in-house. No trades today. Just watching the market, watching how leaders are acting, finding pockets of relative strength. So that brings our adjusted beta is the same from yesterday, 0.3. So let's get into some of the charts. I'm gonna put the stochastic back on here, and I want to look at the big 8 and just say, so when we look at the QQQ, we are we're getting around 12 to 13% off the highs now. So yeah, 12.7% off the highs now. And if we look at some of the big 8, Apple's 12% off its highs, Amazon's 20, Microsoft's 15, Meta's 9%, Nvidia's 25, Google's 17%, Netflix 12, and Tesla 28. So you get the gist of it. A lot of these tech stocks and the Qs are quite oversold, but that doesn't mean we're going to get a rally. When there's geopolitical concerns, election volatility, and lack of breadth in the market, oversold can get even more oversold. But this is something we're monitoring. And there was some stocks that showed some relative strength today. TMDX is one. This had a solid earnings report. Again, gapped up, closed low of the day, but finished the day up 5% today. And this is trying to get out of this pivot area. Palantir closed the day up 10%, getting back above that 50-day on a good earnings report. Nice volume today. Kava is another one that found support at this 100-day and reclaiming the 21. 50 days right here, but overall, this hasn't leaked too bad. This was a clear leader in this run. So after a big run in a stock, you expect it to base, and this could potentially be building out a double bottom base, and that's one that we like, that's held up better than some of the other leaders. Shake Shack, this is another one in the food group, gapped up on earnings, kind of came back and retested the 50-day and now hooking back up. Carvana, this is again another one that's just hanging out right at its highs. ServiceNow gapped out of the space on earnings, came back into the 50-day, now is starting to pop back up. This is definitely a top name if the market starts to write itself out and turn back up. Dash, this is another one, had a positive earnings reaction and another day three higher high. ISRG, this is another medical name, bounced off the 50-day overall, showing some relative strength. So there are some names that are hanging in there. But again, some of the best looking charts, like I mentioned earlier, are, like a Coca-Cola. This is trading into new highs. You have Triple M, another one that had a strong earnings gap, putting a flag. Procter and Gamble, another one. And, these aren't the stocks that we traffic in. One, they're very cyclical, so they have their times that they work. And two, once they all start to look really good, that could be a sign that, the rotation is going to go back into the growth stocks that we like. And then lastly, these stocks aren't going to outperform the S&P 500. And some of these names move quite slow. So it could take a couple years to even get a 15-30% gain. SMCI, so this reported after the bell. It's currently up a 1%. So, but this stock came off quite a bit. It is this was the high flyer and it's now 50% off its highs. So this will be, this may leak off into NVIDIA and other semiconductors, AI related names. And yeah, so those are some names that showed some relative strength, and some key things that we're looking for is we've had the red arrow on market leaders for over a trading week now, and we want to see the leadership start to regain itself and start to see tight, clean risk reward setups in those. And second of all, we want to see the indexes reclaim key levels. If you just look up pull up a chart of S&P 500, and the best trading environments occur when this is trending above the 21-day moving average, and the stocks make the best moves. This was a fantastic trading environment riding the 21. This is when we got defensive. Again, another great tradable rally. And on 7/16 was when we downgraded the market leaders. And as you can see, we are in defensive mode right now as we're trading below key moving averages. So we want to see these indexes start to hook back up and these moving averages to flatten out and slope back up. And this is a process. It can take time, and that's why patience is important. And as you can see in here, when the trend was down, there was multiple head fakes here, before another leg lower, another head fake here, before another leg lower. And the rally really started to get into gear when it got above all the moving averages, and it was a really nice trend. And then, like I mentioned, the VIX volatility is much higher right now. And with this above 20, the range is increasing. You saw on the tail of the tape, the S&P's got over 1% daily range, and growth stocks are even more volatile. So that could be even a 3 to 4% daily range that we'll be seeing in those stocks. And that is a tougher environment to swing trade. And sorry for my voice. I've caught a cold similar to Don, so I hope it's not been too bad to listen to. But I wanted to end on a cool quote that I saw today, and it's that this is from Jesse Livermore. One of the most helpful things that anybody can learn is give up trying to catch the last eighth or the first eighth of the move. These are often the two most expensive ace in the world. And just wanted to bring that up as some people get FOMO. This is the first day bounce. If the indexes and leading stocks start to set up, we'll know and we'll act accordingly. So that is going to wrap it. As always, like to hear from you. My email is connor@revereasset.com, and you can reach out to Dan and Don at revereasset.com. Phone is 855-REAL-WEALTH. That is 855-732-5932. And we name our flagship portfolio GROTECTION. We want to participate when the market is in an uptrend and protect when the market is in a downtrend. And we are in protecting mode right now. And if you're interested in becoming a client, please reach out. And with that, I'll wrap it for Tuesday, August 6th. This is Connor Bates with Revere Asset Management, telling it like it is. I hope these daily videos have been helping you guys navigate this market volatility, and then hope you have a good rest of your evening.